What's up investors, it's the Russian Dude, and let's right away talk about the main topic of the video, Google announcing very first in its history dividends. Long story short, they did present an earnings report recently, and this was a pretty good one. They beat all the expectations, revenue, earnings per share. They even did announce a buyback worth of $70 billion and 20 cents per share dividends, which is, to be honest, a pretty unheard of event for this kind of sector, for technological, for the IT related companies. And yes, Google was not paying dividends until then. Now it does. So if you are investing in Google, now you have a dividend paying company. And as a result of this report, Google's share price went approximately by 12% in after-market trading hours. Then we have the Microsoft report, which was also able to beat the expectations pretty much everywhere, which resulted in its stock price also going up by approximately 4.5%. But it was not the same for Meta. Even though the report did show an increase pretty much everywhere year over year, the quarter over quarter numbers are pretty much all of them are negative. Then Mark Zuckerberg also revealed a very big spending in artificial intelligence, which is a very hyped and competitive industry at this very moment, which started to make investors question the legitimacy of this decision, because I mean, there are so many other great companies, so Facebook might not be the top player in this industry if it does not play well, and then there are these billions of dollars spent will actually become wasted. As a result of this, Meta stock price fell as much as 19% in a single trading day, and it closed at approximately negative 10%, but year-to-date share price is still in the positive territory. And if you are watching my main channel, The Russian Dude, where I talk about geopolitics, you already know that Joe Biden recently passed a law supporting Ukraine and Israel. And one of the things about this bill is that it is banning TikTok in America, unless the company ByteDance is willing to sell its company to American pretty much government, which TikTok is not willing to do at this point, at least, or pretty much almost never. And the fear is that China might do a counter measures, which basically will be limiting Apple on its own territory, in its own country. I mean, let's be honest, they do have a lot of their own smartphones, for example, Huawei. I hope I pronounced it correctly. So Apple for them is also some kind of this Western technology which is spying on their own people. Apple is obviously a pretty big market, China is obviously a pretty big market for Apple, so if they do lose this country, this will severely affect the earnings of the company Apple. And now guys, let's really briefly talk about why do I see that there are some kind of signs that the stock market rebound is somewhere around the corner. We've also been talking about this in more details in my previous video, so please go ahead and watch it. But to begin with, right here is a very interesting picture, since we've already been talking about Meta, Apple, Google and such, Microsoft and such big other companies. Right here is the picture which shows the PE ratios, average ones, of those companies. You can see that potentially they might still be considered to be overvalued, but then guys, do not forget that these are the companies from technological, IT, this kind of sector, and in this particular sector it is relatively normal to have PE ratios of a little bit higher than the average per market. Historically, average PE ratio is approximately 15 to 20, so seeing PE ratios of 22 to 47 on this particular picture does not show that the situation is catastrophic. Some companies, yes, they might be a little bit overvalued, but it is not like that these are triple digits. And this thing is important to know, because these magnificent 7 companies, which once again are almost $1 trillion companies, they are holding a significant portion of the entire S&P 500 index, or at this point the entire stock market of America in general. So depending how these companies report their earnings, they can influence market as a whole. This is pretty much also in some way kinda maybe similar to technological sector, which is also a very big portion of the entire stock market in America. And so as you can see from this next graph, the performance and the influence of the technological sector on the stock market is not that significant, which is one of the signs why I think that the reverse of the market might be happening very soon, and soon you will know exactly what I mean. Another picture, as you can see right here, shows that there is an incredible selling pressure on the very same technological sector, and it is not just retail investors, us guys. It is also hedge funds, mutual funds, corporations, every single person, almost every single company, at least the majority of them, are selling technological companies right now, which causes incredible, once again, selling pressure, which brings the price down. Then just among retail investors, the fear and greed index on the stock market right now is in extreme fear range, which basically means a lot of people are getting rid of their stocks. And it does not just matter about technological sector. Speaking about retail investors, at this point they sell pretty much everything and dominantly technological stocks. And ultimately, right here is the picture which shows the outflows of USA oil ETF. At first sign you might how is this related? But it does show that it had one of the biggest daily outflows of money out of this ETF. And guys, you once again might remember from my previous videos, whenever there is some kind of risky activities on the stock market, whenever investors do not have that much confidence in regular stocks, guess what they do? They switch to more safer investments, which are either treasuries, fixed income assets such as bonds, or even commodities. The ones which are gold, oil, and so on. So guess what happens when exactly the opposite happens? Whenever people start selling those quote-unquote safe investments, this basically means that the sentiment is changing in the opposite direction. So as you can see, I'm bringing up all these graphs and charts to kind of start supporting why I do think there is a reversal in the market, and right now I'm gonna explain why I do think like this. So basically what I mean, all this news I just mentioned, plus the news of the previous episode when I did mention that 73% of the US stocks right now are being extremely oversold, which is the event which only happened in 1% of the times in the history of the stock market, and it eventually on average led to approximately 153% growth within the next year. What exactly we are seeing right now is extreme selling pressure, particularly in the tech sector. But the selling pressure can only continue as much. Until the prices become so attractive, the very first investors, the smartest ones, they will start actually finally buying stocks. Because guys, let's not forget one of the best saying about investing: you should always buy whenever there's blood on the street, especially if it's your blood, especially if your companies are bleeding, and if these companies are good companies, you should just dollar cost average into reducing your average prices. And basically, yeah, whenever everyone is afraid, whenever there's a big uncertainty, whenever there's big fear, obviously the stocks are becoming extremely attractive. The stock market will most likely never collapse, because if it does, your money, your investments will be the least of your problems, let's call it like this. But it always creates incredible, at some point even generational building wealth opportunities. So yes, unfortunately we are not seeing such opportunities right now, but we do see that there is a lot of selling pressure, which already brought the prices for particular companies and even sectors so much down, which already creates pretty interesting opportunities. Once again, it is all the way until some first investors start buying these stocks, and then technical analysis will start showing new support and resistance levels, then robots will start buying, and then this will be just pretty much a chain reaction at this point. And I'm not saying that the entire stock market will recover once and for all, but there might be a pretty good rebound opportunity of, I don't know, 10 to 15%. But okay, now let's talk about actually a very concerning problem which not too many people talk about, which grows even bigger every single day. What I mean by that is the US debt. And to begin with, right here is the graph which shows that only in the last 4 years alone, the total debt of America grew by $11 trillion. And previously, it took America 220 years to grow its debt by exactly the same 11 trillion, not 4 years. At the same time, we do see a slowdown in the American economy. We do see that the inflation is not budging that much anymore, or it might even start going up again. Which basically means that the Federal Reserve cannot reduce the interest rates right now. They must be kept at current levels, or they might even be increased once again. And before I give you the conclusion of this chapter, right here is another table which shows current inflation and interest rates of different countries. Feel free to pause the video if you want to see more details. So, the reason I showed this table is so that some of you might ask me a question. Well, other countries, they also have high interest rates, inflation. Well, their economies are not collapsing, so what makes America so special? And well, to answer this, these countries do not have national debts which severely exceed their even entire GDPs. And even though there is no significant pressure right now for America to repay its debt, you still have to maintain it, which basically in some very easy understanding means, let's call it like this, making monthly payments, just the very same thing you do about your credit cards. And whenever your national debt is in trillions of dollars, just maintaining it, not repaying, just maintaining it costs billions of dollars per year. These are literally just money spent on nothing for the thin air. And so basically America so rapidly increasing its debt and doing nothing about it is simply just like kicking a can down the road. They're like, we're just gonna continue doing it as right now, and somebody in the future is gonna figure out the way out of it. But eventually this road will be over, there will be a brick wall, there will be a dead end, and the bill will be due. Trillions of dollars of debt cannot be just simply forgiven and they cannot just simply disappear. But okay, to finish this video, let's briefly talk about crypto news, extreme volatility in Bitcoin in literally under a couple of minutes. And so yeah, first of all, the outflows of Bitcoin ETFs increased significantly. They lost $120.6 million in one single day. At the same time, on April 24th, this was one of the biggest in terms of trading volume of Bitcoin day for the last 4 weeks. Trading volume does not mean there was only selling or only buying. Trading volume means both buying and selling. And another thing is that historically, whenever Bitcoin halving was happening, the difficulty of this mining was decreasing. Unlike it is right now. In fact, what we are seeing right now is almost once in a lifetime event, at least it did not happen previously, is that right after halving the difficulty of mining is increasing. And so as a result, what do we have? The outflows of Bitcoin ETFs reached very big numbers. The difficulty of mining increased. Then mining itself became not as profitable after halving. I guess you guys already know why, which basically means that the supply of Bitcoin itself decreased. I would say significantly. And just if the demand for Bitcoin even stays the same or exceeds, this theoretically should increase the price, even though all the news we receive right now might sound like completely the opposite. This is the post-halving extreme volatility which has been happening after pretty much every single halving in the past. And this is what we are going right now at this very moment. It is very hard to tell exactly where the price will be tomorrow or next week, but if you're a person who likes to extract profit from high volatility, right now probably is one of these good opportunities. Guys, as always, everything I did mention in this episode was for entertainment and research purposes. Please always make your own research before making any investment decisions. Thank you so much for watching. If you did find this information helpful, please subscribe to my channel. I will appreciate it a lot. Thanks so much and see you next time.